So do you agree with that sentiment that the ADP report, it has a greater weighting and could be a market mover and a market looking for data about the economy, looking for data about jobs?
There's no question that with the Fed really trying to be data dependent, people are going to look at it. But there's a lot of data right now, and I think we're coming off a strong earnings season. There is going to be more Fed cuts coming, we believe, whether it's this month. The market thinks it's going to be this month. We'll see about that. So I don't think we can hang it all on one report.
All right. The shutdown. You put out your playbook for the shutdown and what investors need to know. As we look at different sectors in the markets, do you see investors moving to quote unquote defensive sectors like healthcare or staples? Do you see them moving to the bond market? I was actually talking to Schwab's chief trader yesterday. He says he's seeing a lot of investors actually turn to the options market, hedging for downside.
I think we've got investors all over the world, and certainly a lot of the smart investors have been looking at structures to protect some of the really strong gains that they have. I think for us, we're continuing with kind of the same themes that we've had that have worked. Things like tech, AI, things like power and resources, which are being driven by tech, and healthcare. They're not really, over the medium term, going to be impacted by this shutdown. The other thing, and something you've highlighted, is that the dollar is really a place that is absorbing a lot of the shock that we're seeing in markets, and gold is something that we've been overweight as well. Finally, I would say, don't make this harder for yourself than you have to. There's opportunities outside of the United States. China tech is an area where global investors have been moving. We think that the political changes in Japan could be something of a turnaround for that market. So try to play the whole chessboard here.
All right, trying to play the whole chessboard. By the way, you mentioned gold. Gold pretty much at a record right now. We continue to see it hit new records as we've seen more volatility here in the U.S. and also more global volatility. I want to go back to one of your other points about the dollar. This decline in the dollar that we've seen a recent rebound, actually, but year to date, we're seeing the dollar down double digits. What does that mean for the U.S. markets long term, especially if we're going to see a longer shutdown that would hypothetically continue to weigh on the dollar?
Well, for some sectors, I think it's really unclear if this is a problem for some sectors like tech, where much of their sales is overseas, and they're running large businesses and they don't need a lot of debt. So this is a time to look for quality in companies, and those that are kind of more immune to the dollar weakness. But I think it's also led investors to reawaken their interest in other parts of the world. Another area I should mention is emerging markets. We like Brazil. Valuations in other parts of the world are cheaper, and some of the global dynamics are causing our clients and investors around the world to take another look there.
All right. More broadly, outside of emerging markets, are you seeing opportunities in other areas? I was talking to some other investors. They're seeing some opportunities in commodities, things like platinum, copper. They seem to be moving higher. And also, as you mentioned, in emerging markets, generally, when we see moves in higher in commodities, emerging markets are often the beneficiaries.
Well, this power and resources trade is something that we're playing globally, trying to be selective in most cases, but that if you go from the AI to the server farms to the powering those, that does trace all the way back to this tremendous demand for resources. We're also perhaps seeing some stabilization in China and maybe some more government stimulus, which could also be a boost for commodities.